last panel of the evening, we have 4 mega acquirers sitting here with us tonight. Why don't we just go down the line and give a little introduction of who you are, where you work, and what you do. Ryan, please.
Great, thank you. So my name is Ryan Ate, and from Salesforce.com. It's great to be here tonight, and actually very exciting to see everybody in the audience. And there's so much passion here. I love it. You guys have to do more of these events, actually. So
We'll try.
December was your last one, I believe, right?
Yeah.
So you got to do more. Anyways, I've been with Salesforce for about 4.5 years, and have done a majority of the deals at the company. It's a great place. Company's growing really quickly, and in terms of my experience before that, I worked at Deloitte Consulting for about 8 years and did a little bit of investment banking prior to that, actually right before the dot-com bust. So I've kind of gone up and down and hopefully back up and up.
So we're going to draw a name out of a hat tonight, and Salesforce is going to buy your company. So if
The question
feeling
is
lucky,
how much?
Yeah.
We can all buy.
I've done much.
Please, Robbie.
Robbie Kwok. I'm from LinkedIn. We are not a mega acquirer just yet.
Getting there. You're on the path.
Aspirations, for sure. I've been at LinkedIn for about 1.5 years. I run the Corp Dev and Biz Dev team there. And prior to LinkedIn, was at Yahoo for about 8 years. And so I was actually there when Microsoft tried to buy Yahoo. And Rick, you are absolutely correct when you said that. And then prior to that was a banker for a number of years. So very excited to be here. Thanks for having me.
Cool.
First of all, thanks again for everyone spending the time. I appreciate that. I'm Mark Brown. I run the corporate development group at Microsoft, overseeing all of Microsoft's M&A and strategic investment activity across the globe. I've been there for roughly 10 years, and before that I was a banker and a lawyer.
My name's Cian Wang. I'm from Intuit. I've been there for about 4 years. I came to Intuit from McKinsey. I was at McKinsey for several years in San Francisco. I started out after business school at Siebel Systems, where I did business development and sales strategy and operations. And before business school, I was actually a corporate lawyer on Wall Street. And I gave up the law to go back to business school, except I did my JD MBA the slow way, 5 years at 2 different schools. But I do both strategy and corporate development at Intuit.
Good. So I've got a couple teed up questions, canned questions, but start thinking about your questions. We actually had people, when you signed on to the website, put in some questions, so I've cherry-picked a few of those. Kind of the crowdsourcing method here. So let's start off with kind of planning and timing. When does a startup, a lot of interesting startups in the crowd here, a bunch of incubator companies and some other really cool startups. When does a startup start to think about exit? When do they start a dialogue with you guys? And who should they be talking to? Should they be getting your business card after this panel, or should they be going through biz dev or product group? I'll throw it out. Who wants to take this one?
Why'd you start?
Go for it, please.
All right. So that's actually an interesting question, because there's really no perfect answer. And what I would say is, you are sort of your company, and so when you're out there talking to people, it's really important to be putting your best foot forward, showing your passion. I think Rick talked about passion and having really good products, focusing on that, focusing on trying to be the best you can, not just focusing on the exit, not trying to figure out who's your, which puzzle piece are you and which is the sort of end game. That's not usually the best move in my mind. In terms of who should you be talking to, I think you should be talking to the product organizations of various companies, understanding what's important to those companies, whether it's anyone on this panel or other venture capitalists, whatever it may be. Just kind of getting yourself out there and really understanding what makes acquirers tick, if that's where you're focused, or just in general other people. Maybe there's a company you want to get closer to, learn from, have some type of partnership with, etc. I think building those networks and relationships at especially the early stage is really critical.
Totally agree with that. I think you guys probably have heard this, I'm sure, but the best companies are bought, not sold. And so definitely focus on building your company. And when you build great things and people use it, all of us here will notice. And regardless of if you know anyone at the company, I'm sure they'll find you.
Yeah, I would agree as well. The Microsoft, the vast majority of things we buy are companies where our business groups have had some interaction with that company for some period of time before the acquisition. It doesn't necessarily have to be a defined commercial relationship, but knowing someone in the product groups is the most likely path. I'm happy to give you my business card after
Yeah, I mean, I would echo everything these other three gentlemen said. I don't think there's a right time to necessarily exit unless you think it's the right time for you. I will definitely reiterate that I think that it's absolutely crucial that you have the buy-in of the various business units or product groups, right? You can come in at the corporate level to one of us, but that's actually only going to get you so far if there's not a buy-in from the business group. Because at the end of the day, a business group is going to have to sign on for revenue targets and potentially also synergy targets. And none of us is signing up for that. And so unless they're on board, it's never going to go anywhere. So I think the most successful deals that I've seen come in through the business unit, where the business unit is already bought in as to the strategy, the fit with kind of the core capability, fit with the company, et cetera. Maybe there's even a partnership and a kind of a trial run before any acquisition. So those are the ones that are typically, I think, I've seen are the most successful. But I think it's that business unit connection as opposed to the corporate level connection that I think is really critical.
You know, of the deals you've done, broad question, how many are you actively hunting versus how many is there, you know, established biz dev or some sort of relationship? Or maybe even simpler, how many of the deals you've done have the startups come to you versus you've approached them first, whether it's you or a product person in the entity?
Can we start on that?
Yeah, please.
I would say 90% we're the pursuer versus something gets thrown over the transom either from a banker, a VC, or the inbox for corporate development. I just think your chances of success are just far, far greater if you do that. Now, that said, I think there are certain things you can do to get introduced to the right people, figuring out where in the organization you fit, getting in contact with the right people in the business unit or the product groups, having meetings, et cetera. But I would say, in my experience, kind of 90% is the hunted versus the, we get contacted.
So maybe as we go down the line, adding to that question is how do you, Mark, Robbie, identify targets? Kind of give us a little insight into your process of, you're reading TechCrunch, you like the
Sure.
stats.
We're pretty close. It's probably more like 80-20. There are cases where we'll get something random over the transom. But part of my group's goal is to make sure that even when something comes in over the transom, we are thinking about what are the possible companies that are doing the same thing in Korea or Australia or Brazil, and to not be myopic about just because something came in through the front door that is the only thing that's out there. So we hopefully pride ourselves on making sure we're really doing the right diligence, and that sort of speaks to your question. I'm trying to suck up as much input and data, whether it's TechCrunch or there are other places and people in Europe that are very helpful in letting my organization know what's going on the ground in Europe. And then we have 1,000 or more biz dev people who are out there touching companies and are in the world. So I have a vast array of people to pull from, but it's my job to pull, despite how the deal actually first comes in the door.
Same thing for us. We've done 3 acquisitions since July of last year. When I joined in February, we decided that acquisition was an important part of growth for LinkedIn, and so we established a process, a framework, and one of the things we decided on is how do we source companies. And there's actually a lot of different ways that we do this. The traditional things where the media, TechCrunch, Mashable, all those things are great sources for us. There's the connections. We are LinkedIn after all, so a lot of friend of friends, coworkers of coworkers, VCs, bankers, etc. One of the things that I found was most unique, which was different from Yahoo, where I also did a bunch of acquisitions, was our Open API program. A lot of developers use LinkedIn APIs, and we track that stuff pretty closely. We have dashboards, and we see what's taken off, we see how things change, and anytime we see something interesting, we definitely reach out and talk to companies. We want to be acquiring more on the early stage than the later stage. That's just how we're thinking about our acquisition philosophy, at least to start. But that doesn't mean that we won't do later stage or bigger dollar amount type stuff. But I think that since we're pretty new to the acquisition game, at least the company is, I have erred on the side of smaller teams, smaller acquisitions, do a few of those, make sure we get those right, and then go after the larger ones.
So, for Salesforce, I think it might be slightly different in the sense that we're focused on, our core business and growing our core business. And so, to say that we're always hunting, I think it really depends. We're working collaboratively with, our product organization, our sales executives across the board to really understand what makes our customers wildly successful and what gets us out there. And as part of that, there may be certain companies, there may be certain entrepreneurs, technical individuals, et cetera, that look like great fit for Salesforce. And we've done deals of different sizes across the board. And, as we go into that process, I think, it's important to note that we try to learn the space, right? And so really understand who are the key players in a particular space without really getting too specific. What are the key players? Who are the leaders? Who are the innovators? And how will they help to sort of make us, for example, more social, open, and mobile, which is what we're focused on as a company. That would be sort of my overall comment.
Let's stick with you for a minute. Salesforce has been a fairly active acquirer. Of the folks you've acquired over the past 12, 18 months, did you have existing relationships with them, with most of them? And maybe talk about how that fed to a deal or led to a deal.
Yeah, so absolutely. I think in every case, at least that I can think of, we've always had a very close relationship, whether it's a product management organization, whether it's our CEO, whether it's someone else in the company. And, we're usually brought along in the process just because we try to work as closely as we can. We're not walled off, which is good in terms of just getting a little bit more exposure and get a little bit more breadth in terms of, what's happening. But definitely we had a relationship. I would say we try to, if a company's built on our platform, for example, if a company is an AppExchange partner, just being very specific, as well as if a company's has an integration with Salesforce, that's very important to us, just so we can know the people, the business, and how it would potentially work within our company, and also just to get to know the entrepreneurs.
Okay, good. Let's get to the fun questions of valuation and negotiation, and I'll put it like this: how do big deals happen? Salesforce just had a big deal with Radian6. Put on the professor lecturer hat and tell these guys in the audience how they can optimize for valuation and how some of these deals happen. Is it strategic value? I mean, they're acquisition hires. How do you set a price on these deals?
Good question. Tough question. So, really, it depends on the company, and it depends as well, sort of the acquirer. And I'm just trying to be very general because everyone's different. Every acquirer up here is different in the way that they approach their deals. As it relates to that specific case, without going into too much detail, I think it's important to note that a company should be focused on the product, and that's the first and foremost thing, at least in my mind. Building the product, making it very attractive, making it easy to use, making it, at least in my view, social, open, mobile, and sort of focusing on that right now is very important. As it relates to maximizing value, whether you have a very fast revenue growth, whether you have a product with a lot of users and you think there's a way to monetize that in the future, I think focusing on those key elements of your business are really important. But again, not losing your core fundamentals of kind of why you got into it. And, that's kind of more taking off my professor hat and trying to be, giving more of an entrepreneurial guidance in that sense. You need to focus on why you got into this in the first place. And, as Rick said, I think very well put, was the exits will come if you're doing a good job. And, as it relates to Radian 6, great company, great entrepreneurs, and, that's why we are where we are today with that company.
Mark or Robbie or Cian?
I would say that there are probably really three prices that are out in the world when we're having one of these conversations. There's the price that I've determined that Microsoft is willing to pay. There's the price that you're willing to take, and then there's the agreed price. The three of those may not have any relation to each other at all. And we see, you hear bits and pieces of stories, whether it's rumors about Groupon and what they did or would not take, et cetera, et cetera. It is an art. There is no science to this. You all have numbers in your heads about what you'd be willing to take. Vitaly and I were talking earlier. You have a number. And it can be based upon anything. What your friend got in their last startup, what you think it requires for you to be happy, whatever that might be. From the Microsoft perspective, for most things, we're looking at those same things. We're looking at, what did Radian 6 just trade for? What does that mean for your board members? What are they then thinking about the prices in the marketplace? But fundamentally, I'm going to run an analysis that says, what is Microsoft willing to pay for this? And that's primarily a build versus buy kind of thing. What am I willing to pay in and above what it's going to cost me if I wanted to go build that feature, that functionality? And there's some things we realize we can't build. You might not believe that, but there are some things we realize we can't build. And then the price is really ultimately what we agree to. And again, that third element, the agreed price, may not have any relation to what I thought I was going to pay, what you thought you were willing to accept, because there could be other dynamics in the situation which we didn't really talk about, which are there other companies that are interested in buying you? How important do I feel you are to the success of any one bit or piece of Microsoft, or Microsoft in general? All those factors go into it.
I would say we get to the valuation question at the very end. For us, it really starts off at the strategic level. Is the acquisition on strategy? Is it something? Is it a company? Is it an area where we think we can be successful? Is there a sustainable competitive advantage? And so we answer all of these questions, and then we get to the valuation. On the valuation, I can just tell you what we do, and at the risk of stating the obvious, I mean, we do a valuation of the company on a standalone basis. We kind of try to figure out what the revenue synergies are, which is cross-sell and the like, and what the cost synergies are, which is probably less relevant for a startup. And that gets to we discount it at our hurdle rate, which is 15%, and we try to pay as little as possible of that value. So whether that's, let's call it at a minimum 70% of that total enterprise value. And of course, it doesn't always work out that way, but that would be kind of just the plain vanilla model. And everything's a kind of a negotiation from there. But that's kind of how our process works.
So Intuit doesn't just pick 170 million.
No, we have done 3 deals in a row, all at 170 million. I don't know. How
And
that
it's not the Excel spreadsheet. It actually
It's
works.
it's yeah. I don't know if the check printer was broken at that point, but we have done not 171, 160, and literally 170 for 3 different deals. So
Wow. The only thing I would add to that is I think that it's very tempting to close a gap between what you want and what the buyer is willing to pay with an earnout. It's very tempting. And having acquired companies with earnouts, and Rick certainly can attest to this, it is extremely difficult to get to the full earnout, and it almost always is the point at which there are disputes between you and the acquirer, and that's when things start to go downhill, and the acquirers don't realize the value that they end up paying, and you end up not getting what you really wanted, and it's just bad. So, not saying that earnouts don't work, but you have to be very, very careful about how it's structured. You have to understand what the company does with earnouts. You have to understand how it's all organized, and think through all the factors. But I think most earnouts don't work. I think that's true.
The only thing I might add to that, every company has its own sort of understanding. The CEO understands what they think the value may be, for example, but the acquirer may have a different view, and so they go through that process. And as you guys talked about here already, it depends sort of what you come out at, how you value it, what the model looks like. But there may be certain things that the acquirer looks at that the entrepreneur may not see or may not sort of have the same mindset on. And so if there are four core elements to your business, I might only look at two of them because those are the two things that I'm excited about. That's different than what you may think your own standalone value may be. And so you just have to think about who is the person who's looking at my business and sort of what are they focused on, and be very clear about that so that you don't have a disconnect. Be very clear about sort of what are they trying to achieve with this acquisition. Understand the strategy to the extent you can, and I think it makes that process a little bit easier.
Yeah, good. All right, two more questions and we'll open it up. Let's talk or dissect why deals fail or unravel. Do you guys see patterns of reasons why things fall through, pitfalls to avoid? Give a few nuggets or tips to the folks in the audience.
Sure. So starting on this, I think there are many, many reasons why deals fail. A good one would be IP isn't clean. You said it best about get your IP house in order. Very important. Could be you try to get very cheap contractors in the beginning as well from like an HR perspective. Make sure that your house is in order there as well. Make sure the people who are working for you are like the people you'd want to introduce to your parents, and the people that you'd want to sort of be very focused on, and you could end up spending a lot of time with them. So make sure that those are the people that are going to come on board. They're going to work as hard as you work, and they're going to be people that could be with you through an exit. If they're not those people, you want to at least have the right legal agreements in place so that if they need to depart, they can depart in a clean fashion. That's something that could destroy a transaction. Depends on sort of the magnitude of the situation. I would recommend running background checks on people you hire. That's my personal opinion. You don't want to get and learn certain things about people in the future that you didn't know about them in the past. Other things I think important to note would be related to IP, but sort of more along the same lines of who are the competitors in the space, right? What are they doing? What's similar? What's different? What's my core value proposition? And how does that make me very unique? Acquirers want a unique asset. And that unique asset obviously becomes more valuable depending on the level of uniqueness. But those are my sort of three things I guess I'd focus on.
Good.
Did you mean deals when they're happening or after they close?
Let's open up to both. Yeah.
So I actually think that not enough deals fail before they close, because it's very tempting when you've signed that no shop and you've got that dollar amount in your head to just power through. But I think as you work with the company with an integration plan and things don't look quite right and you don't really believe in it and the acquirer doesn't believe in it, people don't walk away. And that's kind of tragic, because when you close a deal like that, it's going to fail. It's bound to fail in a short period of time, and then nobody's happy, maybe except for the VCs. But the acquirer becomes really pissed off, and you burn bridges with those people. So that's one thing I just want to throw out there. But I think most deals fail after they close because there isn't a good buttoned up integration plan. And part of that plan is all the logistics of, bringing the people on board, et cetera. What are you going to be doing? How much you get paid? Great. That stuff is pretty easy. It's the big picture, vision, strategic objectives. What are you trying to accomplish? What are you going to be responsible for? What are your success metrics? All those things are extremely important. And if the buyer and the seller are not aligned, it's really difficult to make any kind of an acquisition integration work.
Yeah, I'd agree. I don't have much to add to that. There was a pet peeve of mine, and you won't believe me about this, but the biggest thing for me is when people lie. You would think that that's a pretty obvious thing, but people lie all the time, and that's the one, whether it's about your IP or the use of open source in your product. None of those, from the Microsoft perspective at least, are absolute deal killers. The notion is you need to tell me about them, especially when I ask you about them. So I just encourage people to be actually honest in these kind of, and I know it's tough. There's a fine line between dissembling and lying, and I get that. I'm not naive in that regard, but you need to be very careful as well. And I think Rick made a very good point about going through that failing process on the target side, and the energy and the effort that's put in. You need to be very careful about that. And so I would just offer up that be honest with people, be upfront with people, and you can decide whether that's the right fit for you or not.
So I don't know if I have anything that new to add. I would agree. I think legal exposure is one reason where I think things fall apart, either IP related or we had one potential deal where the founder was involved in litigation with the company, the founder, ex-CEO. And so that's never anything you really want to deal with. But so legal exposure. The second thing I would say is just in the product or technical due diligence, things are not as great as you seem once you look under the hood. And the last one I would say is just valuation expectations, right? So, for example, anyone who has anything to do with kind of savings or coupons or daily deals right now thinks they deserve a 60 revenue multiple. And so that gets a little bit, frothy. I would say post closing, I would agree with Robbie. I think on the integration stuff, it's really not the kind of hardwire issues like get everybody on email and make sure everyone has a business card. It's really the softer cultural issues. I think what we've seen is it is a major culture shock to go from being a startup to being part of, in our case, an 8,000 person company. And in his case, I don't even know how big, 100,000 person company? 85, okay, sorry. And you cannot underestimate what a big change that is. And so managing through those issues in a very kind of targeted, focused way, I think is absolutely critical. And what we try to do on integration, we have our whole integration team, or some companies hire kind of McKinsey or BCG to kind of run it for them, is we try not to do too much. So we sit down with the GM and we say, well, what are actually the three things you want to accomplish? And we just kind of push to those three things as opposed to trying to do everything.
You mind if I just
please.
add a couple other things that maybe just thinking pre-deal, because you guys touched a little bit on post-deal as well, but time is very important, something I forgot to mention. So time kills deals. If you drag things out too long, people lose interest. Could be on your side, could be on our side, you just don't know. And so there's usually a window with most transactions, at least in my experience. And so sort of making sure that you're focused on the right issues. Negotiations are tough. Certain things are more important to some people than to other people, but you need to know what's important to you and then bring those issues and sort of have a position and, as said before, negotiate off of them if necessary, but otherwise have a good footing. The other thing I would say that's maybe a little bit different if I were to put myself in the sort of startup entrepreneur type shoes is make sure that the acquirer has sort of the right decision makers and sponsors in the deal. Make sure that you're meeting with the right people in the company. So, if that means you need to meet with the CEO, or that means you need to meet with the CFO, or whatever it may be, key product execs, just make sure and ask those questions. It doesn't hurt to ask, is there anyone you need me to meet with that I haven't met with? Be open about that. And then sort of the last thing, giving you probably too much data here, but is leakage. Any public company doesn't want sort of leakage in terms of what we're doing or what they're doing, etc., that could kill a deal. And that speaks to keeping the circle of trust within your own company very small and only letting those who need to know about it.
Can we pick on that, pick up on that thread of information exchange, leakage, telling the truth, as Mark was describing? And, I think a lot of startups have a lot of concern about revealing too much about their startup, especially if the acquirer is in the same space or quasi-competitive. How does a startup kind of open the kimono without giving you all the information that if the deal unravels, puts them at a disadvantage? Any words of advice for that? Throw it out to anyone who's got an opinion.
Well, I'd say a couple things. One, and Rick, I think, made a very good point about making sure you have very good lawyers working with you from the very beginning of the formation of your company, and not only helping you with financing, but also relative to M&A. I think that alone is invaluable. Bankers are not my best friends, and I think don't actually add a lot of value, to Rick's point, in terms of smaller deals. The lawyers are absolutely the key element there from my perspective. But you protect yourself. There are NDAs. We take NDAs seriously. We'll want you to sign an NDA, and you should want that as well to help protect you. But at some point, and you need to look yourself and the founders and the VCs potentially in the face, you need to give me the information. So we can work over a time-phased approach. That works. That's fine. But we're going to need to see the information. We protect ourselves when we're looking at source code by outsourcing that review to a third party. So that's not someone at Microsoft doing that. Again, that's should give you some comfort, and certainly gives us a lot of comfort, so that we don't down the road have any issues about taint. But at some point, you're going to have to have made that decision that you want to sell. You want to sell perhaps to Microsoft, and you're willing to go down that process, which means information exchange.
Yeah,
Go ahead.
just a quick add to that. Lawyers are extremely important. The good ones will get you a lot more than you expect. I think that in addition to making sure you protect your technology, your source code, people are your best assets. So it's not unusual for you to ask for a non-solicit if that's what you are really worried about. Acquirers don't like that, so just keep that in mind. But I've seen it many times. So it's another way to protect your people assets from getting poached if an acquisition doesn't work out. But one thing I would say is I think all of us here and many acquirers that you're going to run into really care about their own reputation. So it's not good for them to just do due diligence on you with the intention of stealing or figuring out how to build it. If they are truly interested in buying you, they will most likely go through with it unless they find something wrong with it. So I want to throw that out there.
Yeah, I would agree with all of that. I mean, I think it's perfectly reasonable to ask for a 1-year non-solicitation clause. 2 years gets a little bit long, but I think 1 year is perfectly reasonable. And just like what Mark said, I think, we try to protect ourselves as well and our reputation, and we're very conscious of tainting. We'll go to a third party to help evaluate the technology. If it's an internal team, it'll be maybe a team from another business unit that's kind of qualified to evaluate the technology or the product. And so we try to keep a Chinese wall between them and the directly affected business unit. But, most big companies, I think, are consciously aware of their reputation and are not going to try to, by and large, look at your code or your technology or whatever, and then go try to build it on their own.
Reputation is really a good one. That's a great point you raised. No one wants to be labeled the shark or the bad guy out there, and we're in a small world here, and everyone knows everyone, so you got to keep that in mind. I think the other thing to note, don't hide too much. It's certain things are competitive, certain things aren't, right? So I mean, if you're in a discussion and you have an NDA and you feel comfortable and you trust the individual or the team you're working with, for example, sharing certain financial metrics in my mind are not really competitive, depending on which space you're in, if you have a directly competitive product, et cetera. If you get into a deeper conversation, there may be select individuals that want to see certain parts of the code, for example, or other things that may be more sticky or sensitive. You take those things in phases. I think asking the acquirer sort of what do they need to make a decision and to give you sort of the next step, right? So whether that's a term sheet or this valuation, whatever it may be, ask what they need and, determine if you're comfortable to get there, because depending on the transaction, it depends sort of what the data is. If it's, 5 individuals who have a great product but don't have any revenue, I want to meet people. Right. If it's a company with, a great sales model and a lot of revenue, I want to know more about the model. I want to know more about sort of metrics, et cetera. And so it really depends. But if you hide too much, it's a great way to sort of turn us off. And I think that's pretty consistent across the board.
One last little one to insert before my final last question. Rick talked about doing due diligence on the VCs by asking, have you ever blocked a sale? What are the hard questions that a startup that is in discussions with you should be asking you? What are the hard questions you get? Can you touch on that? Asking for a non-solicitation is an interesting one. Anything else that hopefully you won't be, negotiating against these guys, but, what should they be?
Suggest we tell them to ask us?
Right, yeah.
A question I hear a lot is sort of, what's my future at the company? Who do I report to, right? The simple stuff, but in general, they're actually pretty important questions. And if you leave them unanswered for too long, it looks like you don't have a plan. And so I think you need to be very clear and understand, you need to understand sort of what the company's strategy is for your small company or your mid-sized company, whatever it may be, longer term. So are you going to be happy? Are your teammates going to be happy if the acquisition actually occurs? That's a question, at least, that I would want to ask, and I've heard asked a lot. It's pretty simple. It's not the most difficult thing to talk about, but it's one that comes up quite a bit. There's probably more I have, but I'll pass it down.
Yeah, who am I working for? Does that person have any acquisition integration experience? What was the worst acquisition you did and why did it fail? Like, those are all fair game questions.
Same.
Yeah, I think just what I said before about really focusing on a couple of key things on the integration plan is critical. A lot of those softer cultural issues kind of don't get kind of their fair share of attention. I think really focusing on those is key.
All right, one last, and then we'll open it up. We have some public companies on the panel here, so I realize some of this might be sensitive, but let's go down the line and talk about what's on your shopping list. Salesforce, you talked about, social, mobile. There was a third one I forgot. What kind of companies are you looking for? If you can prognosticate on how many deals you think you'll do, give these guys some hope that they're.
That's the one I'm going to lob to you first.
So I think there are certain areas that are just very interesting in general right now, and including for us. I think at the top of the list is mobile payments. I think payments generally, very interesting right now, whether it's prepaid debit cards, peer-to-peer payment networks, etc. Everyone's got, Visa and MasterCard, I have huge targets on their back by almost every payment startup. I would say that what I would call, web-based customer acquisition / e-commerce. So obviously the most obvious candidates there are the kind of the Groupon and the like. But that extends to kind of online lead matching, like a Service Magic or a Red Beacon. I think is also very interesting to us. What else? Those are probably the main ones right now.
Estimate of how many deals are you looking?
Well, so we have a lot of cash on the balance sheet,
Yeah.
which is not a good reason to go do a bunch of acquisitions. But I would think going forward, we'd probably like to average, maybe 4 a year, of various sizes.
170 million times 4 a year starts to chip away at that
That
cash.
comes out about right?
Yeah,
About
all right.
700 million.
Perfect.
We don't think about in terms of number of deals, so that's not part of how we look at things. There's tons of areas, and this is where M&A meshes with what was mentioned before, is really about strategy, right? You start with your strategy, and M&A is one tactical way of actually helping you reach your strategy. We're building and going to build most of the things we end up bringing to market. It's who we are, and given the resources we have, that is how we think about it. But it won't be surprised that things around the cloud, things around unified communication, things around search and differentiated search experiences would be three of the big things that come screaming to mind. We also think about collaboration a lot. We have an enterprise collaboration platform called SharePoint that we think is pretty special. So there are tons of things, but they match exactly what Microsoft is working on building as well.
How many did Microsoft do last year? I don't know if I.
Total number of transactions was 8.
Okay. Good.
So for LinkedIn, we don't have a number either. I would say that there's probably an upper bound of what we can do this year. There's half of me who does this, and then there's a full-time person on my team. And so if you think about the fact that we do all the sourcing, negotiating, execution, and integration, it's not a lot of deals that we can do. Now, we could add resources, but that's not in the plans. So I would say an upper bound of 4 to 6 for the rest of this year would be quite high for us. In terms of the areas that we look at, we actually do have 5 different areas we look at, but because we're in registration, I can't really say what they are. But rest assured, they're all professionally related because we're LinkedIn. But that actually helps a lot versus when I was at Yahoo, where we looked at every single thing. At LinkedIn, if you're not professionally related or somehow helping professionals be more productive or successful, we probably wouldn't look at you.
Yep. So for Salesforce, this is the common answer, so I'll use it, which is that there isn't a target number. I don't think we operate that way. We don't intend to. We're very well meshed with our product organization, and just in general, you look across the board, we try to reach out to as many people in the company as we can and understand sort of what's important. If acquisition is something that is appropriate at the right time, then that's a vehicle that we use, and that's why I'm part of the team, and we have other individuals who are part of the team as well. If you look across sort of the board in terms of some deals that I can at least talk about, we stick to our strategy, which is, as I've mentioned many times, which is social, mobile, and open. And we have 92,000 plus customers that what things related to our core strategy is there a necessary area that maybe an acquisition makes sense? And so if I think about the platform for Salesforce, Heroku is a good example of that. If I think about our Sales Cloud, Jigsaw is a good example of that. If I think about Chatter, DimDim, for example, is a good sort of alignment to that. And so things that help to grow our current clouds and sort of make us more successful, make our customers more successful, those are the types of things that we focus on. I wouldn't say that we're necessarily, hunting and there's like a board that we need to hit, 4 or 5 deals. That's not really the point.
How many last year?
More than 3.
More than 3?
Yeah.
Quite a few, yeah? More than that, wasn't there?
Yeah.
All right. Politician over here.